Good afternoon. The Finance Minister has given South Africa and experts something to chew on, something to really think about. Tito Mboweni unexpectedly publishing an economic strategy for the country on the Treasury website. The document has been distributed to all cabinet ministers. It makes far-reaching recommendations, as I've just mentioned, on a variety of policy areas that fall under the responsibility of his cabinet colleagues. Now, it's important to note this paper is not a cabinet document, therefore no official status, but it does have an important bearing on the performance of the economy. The minister publishing the document, along with a call for comment from the public. Treasury says the paper is a detailed examination of the structural reforms that can reverse the downward trend in South Africa's growth potential and competitiveness. All right, let's go to the money desk now for the very latest on all of this. And ENCA's Reifua Madina joins us. So the big story today, this economic growth strategy released by the Finance Minister. I made the point at the start of the program. What's different about this? Is it really going to grow the economy?
Well, that's the question that all analysts that have gotten their hands on it are asking, Jeremy. And really, just the current state of affairs, that's where it starts. He says that the current economic trajectory is unsustainable. Economic growth has stagnated and unemployment is rising and inequality remains high. So this is no surprise, but at least there's an acknowledgement and the realization that the country no longer has the time nor the appetite to observe any kind of protocol at this stage. So the task is clear, Jeremy. We have to put on our hard hats and pick up our tools, as the minister is saying, because he's trying to get the entire country involved in rebuilding the economy. So what does he indicate then are the main contributors that will rebuild the economy? So he says we'll need to achieve 4% economic growth and create 1 million jobs, and that will get the economy out of the doldrums. And after the dismal contraction that we saw in the first quarter of this year, it's going to seem a little bit difficult to do that, won't it? But another important element, as I've just mentioned, there will be to create those 1 million jobs and a drop in the ocean based on the current levels that employment that we're currently at. But according to this document, it's not impossible. Let's take a look at the tools that we'll have to pick up here so we can ensure that we can rebuild the economy. So he says we're going to have to grow tourism, cut red tape around the likes of tourism and other business initiatives, which include SME growth as well as the private sector getting a bigger slice of the pie in the economy. And also an important one will be to unbundle Eskom. But Jeremy, the interesting question here about Eskom is going to be who is going to buy the assets of Eskom? And let's just listen to economist Sam Rowland on some of those issues around power.
I mean, things like the performance of state-owned enterprises, we see in the electricity column, we see they're talking about the over-reliance on municipal budgets. We know that it's a sort of a case of the few subsidizing the many, and the danger is that in an economy like South Africa, we find the reliance on the state growing faster than our tax revenue has increased. We've seen that we know the many problems SARS are facing in collecting tax revenue. So our revenue base continues to shrink, but those reliant on the tax revenue we collect is continuing to grow faster than we can grow our economy.
So I guess the best reactive barometer to this plan that was published last night would be the markets.
Well, it's very interesting, Jeremy. We haven't seen much market movement around this. It looks like market participants may still be combing through the document or unfazed around the details on it, because the JSE was lower this morning, but it was tracking global markets, and this as investors await some direction in the US-China trade war, while several local companies are expected to publish their financial results today. Going to be interesting on that front. On the commodities front, after rising over 1% in the previous session, the price of gold is lower today, but it still is at those 6-year highs on hopes that the US Central Bank will be cutting its interest rate soon. And of course, Brent is still remaining at around $60 a barrel. Onto the local unit now. The rand was firmer this morning while investors remain cautious amid concerns about the US global China trade with the China. And of course, we are seeing changes in the movements as the market digests the Treasury's discussion document that we've just been discussing.
All right, Reifua, thank you very much indeed.